Hi everybody. I just wanted to make a video to show you a foolproof method to prepare your cash flow so that you can ensure your ending balance on your cash flow agrees to your balance sheet. So let's get right into it. One of the first things we're going to need to do is we're going to prepare our balance sheet for current period and prior period. This is because we are using the indirect method to prepare our cash flow, and we're going to need two balance sheets to do that. The other thing we're going to need to have before we start preparing our cash flow is an income statement and a statement of changes in equity. So I've gone ahead and prepared a balance sheet, a very simple example of a balance sheet, and a simple income statement and a simple statement of changes in equity. So after you prepare that, you're going to check to make sure that it is correct, and there are a few steps you need to do to check that the information on these tabs are accurate. If there are differences, it's going to cause your cash flow not to balance. So one of the checks you're going to have to perform, the first step, is to check that the balance sheet balances. So if I go to the balance sheet tab, I'm going to input a formula to ensure that my assets are equal to my liabilities. So I'm going to take my assets and minus my equity and liabilities, and that's going to come back to nil. And I'm just going to drag that formula across to 2019 to ensure that my 2019 balance sheet also balances. The next thing we have to do is to check that prior period equity on the balance sheet, which is this here and its components, matches to opening equity on the statement of changes in equity. So that's these opening balances here. So let's go ahead and do that now using the same formula, taking away one from the other, just to make sure that our figures match. So I'm going to take opening, I'm going to minus the prior period balance sheet equity components. So the components on my statement of changes in equity match back because I have nil balances when I compare them to my opening balance sheet. The next step is to check that current year equity on the balance sheet matches closing equity on the statement of changes in equity. So we checked prior year, and now we're going to check current year. So we're going to do the same thing at the bottom. We're going to take share capital for current year, closing share capital in the statement of changes in equity, and we're going to compare it to share capital on the balance sheet for current year. And we're just going to quickly do the same thing for retained earnings. So we're seeing here that our opening and closing statement of changes in equity balances agree to our balance sheet figures. The next step we're going to do is we're going to check that income on the statement of changes in equity matches the income statement. So we're going to go to the statement of changes in equity, we're going to go to the income line, and we're just going to make sure that our income matches our income. And it does. So now we know that the information that we have on these three tabs are correct enough to allow us to prepare a cash flow that is going to balance. So now we're going to move on to the three simple steps involved in ensuring your cash flow is going to balance. So the first time it might seem like it's taking a while, but once you do it a few times, you're going to be able to do it a lot more quickly. And this is going to ensure that your cash flow is going to balance. By using this method, we are going to pick up all the movements And by picking up all the movements on the balance sheet, it ensures that our cash flow is going to have completeness. And by ensuring that our cash flow is complete, it's going to mean that our cash flow in the end is going to reconcile to what the balance sheet has. So let's go ahead and compute all the movements on our balance sheet for all our balance sheet areas. So I'm going to take 2020, I'm going to minus 2019 to see how that balance moves. And I'm going to do that. I'm going to copy and paste that formula next to all of my balance sheet areas. So you're going to notice that because my balance sheet balances, the movements in my asset is 105, and that's going to equal to the movement in my equity and liabilities. I'm going to get 105. So to keep everything clean, I'm going to move this information now across to a cash flow tab. And the easiest way I find to move it is simply to Control X and cut it to the cash flow tab. By cutting it, we will ensure that our links to our different years in the balance sheet remains there. So if we cut it and we put it on our cash flow tab, and you click into any of these figures, you're going to see it actually links you to the balance sheet cells, the actual cells that we would need to find the variance. The next thing we're going to do is copy across the descriptions. Good. So I can remove these total lines now because I won't need these. And you're going to notice that it's still the same information. Your assets, 105, your liabilities and equity, 105. So I'm going to draw a little line here because that's going to help me show you the principle behind it. So if everything at the top equals everything at the bottom, then we can think of it as an equation. And if you remember your indirect cash flow, you remember that the total at the bottom that we're trying to find is our change in cash and cash equivalents. So it means that I want to find this figure here and this figure here because there's an overdraft. So for me to solve for this figure and for this figure, for me to get these two balances, I'm going to move this balance across the line, across the equal sign here. And once I move the balance across the equal sign, I have to change the sign on it. Good. So now just a quick check again. The top of the line is 95, minus 95, and the bottom of the line is also minus 95. So I'm going to go ahead and move all these balances to one side. And I'm going to go ahead and change the signs to negative. Good. So again, you're going to notice that my cash and cash equivalents, the change in my cash and cash equivalents is 30. And everything that's below the line also equals to minus 30. So this is minus 30, and this, or the total of this, also equals to minus 30. So we're going to now move the overdraft back to the top of the line. And again, we move it across the equal sign, we're going to call this. So this is going to change to a negative. So anything we move across this line is going to have to change its sign. Very similar to what we learned in school. There's an equal sign, you try to solve for a figure, when you move it, it's going to have to change the sign. Very similar to that, same concept. The easy way to remember it, which is one of my steps here. So first you find the changes in your balance sheet. We already found the changes in the balance sheet. And then an easy way to remember is to change the sign on all asset balances except cash. And if you have an overdraft balance, you change the sign on the overdraft balance. Good. So what we want to do next, so I'm just going to shift this down. I'm going to add a total so that you can see that all the changes in all the areas come back to my change in my cash and cash equivalents. And once this happens, this is going to be the framework now for the preparation of our cash flow. So if you remember cash flow, you'd remember that certain changes appear a certain way on your cash flow. So some things are really straightforward. Changes in working capital, for example, appear as, in this case, change in accounts payable, change in other payables, change in accounts receivable, change in other assets. These are actual line items on your cash flow. So these are pretty straightforward. However, there are some things that do not carry line items on your cash flow. There is no line item for change in share capital. There is no line item for change in property, plant, and equipment. So for those, we're going to have to break it down into the components that can be presented on your cash flow. So that's my final step. Analyze the change in each balance into components that can be presented on the cash flow. So we already said accounts payable, accounts receivable, all those are pretty straightforward because those are one-line items on our cash flow. So in order to break down these figures into its components, we'll need to have a look at what caused the change. For share capital, let's see what caused the change in share capital. If we look at our statement of changes in equity, we're going to notice that the change in share capital was because of an issue of ordinary shares. So I'm going to copy this, paste it across here. So all I need to do now is make sure that whenever I create a breakdown for a figure, it matches the total change in your balance sheet. So right now, issue of ordinary shares is the only movement, and this movement matches the change in my balance sheet. Moving on to retained earnings. So for retained earnings, there is no line item for change in retained earnings. However, you have the components of retained earnings, of the change in retained earnings, that would have a line item on the cash flow. So let's see what caused our change in retained earnings. So let's go back to the statement of changes in equity. And we're going to see that the reason for our change in retained earnings is income of 55 and dividend paid of 5. So we're going to take this from here, copy, and paste that across on your cash flow tab. So if you look at the components that make up retained earnings, we need to break it down a little bit further, because while there is a line for dividend paid on our cash flow, there isn't a line for income for the year. However, there is a line for profit before tax and taxation charge. So let's grab those from the income statement. and I'm going to replace this 55 with the components. So again, once I do a breakdown of the change in the balance sheet, I need to check and make sure that it ties and it agrees to what the change is. So my total of my breakdown is 50 and my retained earnings is 50. So now I can move on to accounts payable. Accounts payable is straightforward. We mentioned that before. There is a line item for change in accounts payable, so that is not going to need a breakdown. The next item is taxation payable. The change in your taxation payable, your taxation recoverable, and your taxation charge will be combined together to form your taxation paid. So we're going to look at that a little bit later on, but for now, no further breakdown is needed for the change in taxation payable. Other payables, there is a line item for change in other payables. Property, plant, and equipment. There isn't a line item for change in property, plant, and equipment, and what that means is I am going to have to find out what caused this change of 200. If you haven't done it already, now would be a good time to prepare your fixed asset note, because that will help you identify the reason for the changes in property, plant, and equipment. So if you go across, I've already prepared a simple fixed asset note, and you'll notice that the reason for the change is additions of 210 and a depreciation charge of the year of 10. So I'm going to copy this across to my cash flow tab. I'm going to check and see. I'm going to put it next to the property, plant, and equipment. I'm going to check and see that the movement matches the movement in property, plant, and equipment. While the total of the movement is 200, the sign doesn't. The sign is 200 and this sign here is negative 200. The reason for this is because an addition to property, plant, and equipment is going to represent an increase on the property, plant, and equipment. So that's why it's going to be a positive figure on your fixed asset note, but it's going to represent a decrease in cash, and that's why it's going to be a negative figure on your balance sheet. So all we need to do for these two to match up is to change the sign of the additions and to change the sign of the charge. So now it matches to the total change in my balance sheet. Change in accounts receivable goes straight onto your cash flow. Tax recoverable, we spoke about that before in relation to tax payable and tax charge. And other asset also goes on your cash flow. So now we can start preparing our cash flow. So we start with profit before tax. And we make adjustments for depreciation charge, and all the changes in retained in working capital. So all the changes in working capital, we're going to input those now. So change in accounts payable, change in other payables, change in accounts receivable. Let's see what else we have. Change in other assets. Great. So the next thing we are going to do is include our taxation paid. So once we do these, we're going to pick up all our cash flows related to cash flows from operations. So let's just quickly link them across. Profit before tax, depreciation charge, change in AP, change in other payables, change in accounts receivable, change in other assets, and taxation paid is going to be the total of the tax charge and the change in your balance sheet items. So the change in your taxation payable and the change in your taxation recoverable. So this is going to represent, this total is going to represent our change or cash flow from operations. So the next item we're going to look at is change from investing activities. So the changes for investing activities from in my breakdown is the addition of property, plant, and equipment. So I'm going to put purchase of property, plant, and equipment. And that's going to be this figure here. So now my cash flow from investing activities is 210. What am I missing? Let's see what I didn't pick up. I didn't pick up the issue of ordinary shares. So I didn't pick up the dividends paid, and those are going to come under cash flows from financing activities. So we're going to go proceeds from issue of ordinary shares. So we're going to use the terminology that we normally have in a cash flow. I'm going to link it to my issue of ordinary shares and then dividends paid. We're going to link that to dividends paid. So this represents cash flow from financing activities. Great. So if I add all three together, I'm going to get net cash flow for the year. If I take my opening cash balance, I'm going to link this directly to my balance sheet. So I'm going to take my opening cash balance, which will be 2019 cash balances. So it's going to be cash and cash equivalents less my overdraft. So my opening cash balance is 335. The total of this should give me my closing cash balance. And I'm going to do a quick check to make sure that is the case. I'm going to take my closing cash balance and I'm going to take away my 2020 cash balance, which is going to be my cash and cash equivalents less my overdraft. So when you're doing a check back, remember to put this in brackets. It comes back to 0. So there's no difference between my closing cash balance and what my balance sheet has as my closing cash balance. And that's a simple way for you to prepare your cash flow in a way that we know for sure is going to balance. It's very methodical, it's very thorough. So, and at each step of the way, we recheck that we're coming back to our changes on our balance sheet. So once we apply this basic procedure to any cash flow, it's going to work out. But what I'm going to do in my next video is add a little complexity to it and show you where the changes in your balance sheet are not as straightforward. So for example, in this example, we had the fixed asset addition being the only change along with depreciation is a change in property, plant, and equipment. But it can get a little bit tricky to present it on your cash flow when you have, for example, a disposal or when you have a gain or loss on disposal. So in my next video, I'm going to include those little changes that might cause a little confusion when you're trying to prepare your cash flow, but the basics are going to be the same. Once you understand the concept that is here, understanding or coming up with how to treat with those circumstances that may arise will be pretty straightforward as well. But I will give you a few examples to kind of get you thinking in the right direction. If you have any questions, please feel free to let me know in the comments. If there's anything else you'd like to know or like to see, just let me know and I will try to make a video. Thank you. Bye.